Hello, good afternoon, Namaste Bharat, hello India. This is your host Preeti Chaudhary on this another edition of VC Spotlight with me, Preeti Chaudhary, on LinkedIn via LinkedIn Live. My guest today is none other than Shashank Randev, who is the founder VC of 100X.VC. Before we get started, a quick couple of things for the audience tuned in today. This series is all about drawing out the human from behind the profile, of getting to know the venture capitalist person as a more human level, on a human and deeper level. This is a conversation and a dialogue. So please feel free to put in all your questions and comments into the comment section of this LinkedIn Live VC Spotlight featuring Shashank Randev, founder VC of 100X VC, with me, your host, Preeti Chaudhary. Once again, welcome one and all. Let me pull Shashank into the stream and we will get the conversation started. Good
Hi,
afternoon,
Preeti.
Shashank.
Good
How are
afternoon.
you?
I'm good. How are you?
I am very well, and I am really excited to have you in the studio as my guest today. You know, the
Thanks
whole
for having
purpose,
me.
thank you and warm welcome. The whole purpose of this series is basically to get to know the human from behind a profession, and especially from the VC sort of community, wherein a lot of people, a lot of founders, a lot of ecosystem stakeholders out there have this misconception that people are totally unapproachable, they are not to be reached, and they're totally from a different planet. So, to put that in perspective, I have started this series. I started it with our dear friend Anil Joshi, and then I had Vineet from Rise Ventures last week, and you are here today. So, welcome once again,
Thank you so much.
and
Thank you
thank
so
you.
much for having me.
And thank you for being here. So, let us put things in context, Shashank, just to sort of make sure for the audience to know who you are. Who is Shashank Randev? Where is he from? What are the backgrounds, family, education, so on? If you can please run us through that conversation a little bit, I think we'll be
Sure.
on a flying start to this conversation. Over to you.
Sure, sure, sure. So, thanks again for giving me the opportunity. It's always a pleasure to be interacting with, folks like yourselves who are doing great and amazing work for the community. I'm very gung-ho about the whole community development happening within the tier one and tier two, three cities across India. Just to give you a quick background and for the audience, my name is Shashank Randev, and I'm the founder VC at 100X.VC. I come from an engineering background. I did my engineering from a small city called Nagpur, and passed out in 2003. And since then, I've had a very non-linear path, so to speak. I moved to Bombay. I was part of an early, setup for a listed company called MTZ Polyfilms, in a marketing profile, very different from what I did in engineering, and then moved on to Pune, joined Zensar Technologies for a year, then moved to New Delhi, was part of NIIT Limited, part of their learning management solutions divisions. This is way back in 2007, and in 2008, I then joined IMI, which is an MBA institute in New Delhi. And post MBA, I had the opportunity to, go back to my profile in NIIT Limited. But that's when I decided that, this would be a good point for me to kind of, expand my horizon. And fortunately, I stumbled upon an opportunity to become the founding member for a startup called VC Circle, where I was heading their SaaS platform called VCC Edge, which was a research platform for venture capital and private equity industry. And this is way back in 2009. So I didn't understand venture capital, private equity, and neither did a lot of people in the country. It was just evolving. So moved to Bombay again, which is where my heart lies, and set up VC Circle, and very soon we became the market leader in that category. Was very fortunate to be part of a very great team. My founder and the team which we recruited, I think we went through an amazing journey. We eventually got acquired by News Corporation in 2015, which was a 100% buyout and a great milestone for a young startup like ourselves. And continued to be with the new entity called News Corp VC Circle up till 2016, and then decided to move on. I then again got the opportunity to shift gears, having spent so much time interacting with venture capital and private equity industry, literally selling them a platform. I wanted to get inside deal making. And that's when I stumbled upon another opportunity and I grabbed onto it. It was an accelerator wanting to set up shop in India from San Jose. Again, part of the early team, led 16 investments on behalf of the accelerator. Moved out in 2018, did a bunch of angel investments, and then uh, you know met Sanjay Mehta, who's a very active angel investor in the country. Known him for a couple of years during my VC circle days. He's been a personal, an acquaintance and a personal mentor. Always looked upon his portfolio, and he was working on this opportunity of creating a fund which could then help founders raise their first capital, and that really resonated with me. um, and he was also in talks with Ninad Karpe, who happens to be again a personal mentor and dear friend. And we all got together, and thanks to Sanjay, we with his vision we started 100X.VC. We and during this entire journey we also met Yagnesh, who's the founder and CFO, and our youngest partner is Vatsal, who's the CTO. So all five of us started 100X.VC, lasted in July 2019, and since then we've been on a mission to be the first institutional check across India for early stage entrepreneurs who are building out their businesses and looking to raise the first check. We've made 29 investments so far, and some of our portfolio companies have been from tier two cities, so from Indore, and multiple others from Cochin, so on and so forth. And uh, we are particularly very excited about how India is developing, and really looking forward to investing in the next set of companies, and hoping that 2021 we are able to go deeper into tier 2 and tier 3 cities. We are able to kind of identify talent and identify great business models which are emerging, particularly during COVID, and then get the opportunity to become partners with these founders. So that's a quick background about myself. Over to you, Preeti.
Thank you, Shashank, for that. To me, it is obvious that you had tasted blood right from your VCC days, actually, in terms of being in the midst of so much of debt and equity and money changing hands and so on. Plus, having a non-linear life, I think, set you on the path of actually enhancing your risk-taking appetite. And I cannot, I mean, comment enough of sort of being away from the usual grind, being sort of uh, a, how shall I say, a path breaker, not following the herd, making your own path kind of a thing. And that resonates so much with me, because that is typically the atypical person that I am as well. So absolutely brilliant and spot on with that. Thank you for sharing that story of, how did you sort of come about, what is your background, and how did 10x, 100x, sorry, dot VC start actually. So you've told us a little bit more about, what is 100xvc all about. Now my question to you is, who did you fund first and why did you do that? And I'm not talking about 100x dot VC at the moment. I'm talking of Shashank Randev, a part of 100x dot VC, or any of your first investment that you ever made, because that is something that really sort of brings out, very fond memories and struggles and all of that. So please tell us a bit more about that.
I mean, I started investing in 2016 on behalf of my, the fund which I had joined. But actually, my first angel investment is the company which I really recall, because I wanted to get into angel investments, and I made my first angel investment in May of 2018 in a company called Indo Investing, which I had scouted for my fund, and they'd gone ahead and invested in it, and I decided to be part of that journey. And I remember speaking with my wife and telling her that, this is something interesting. I would like to invest into it. It was a treasury management solution working with cooperative banks across India, and not your private banks. And great founders, IIT kids. I mean, not the pedigree per se, but just great founders happen to be IIT. Um, having hedge fund experience, and they were building this platform for treasury management solution for cooperative banks. And cooperative banks are such underdogs in India, yet if they combine their wealth, they're bigger than the private banks. And that was really fascinating for me, because again, this was going to the, let's say, hinterlands of Maharashtra, onboarding cooperative banks, automating that process of treasury management. Huge opportunity. And I went ahead and invested in them, now with little understanding how they'll grow. And eventually, since 2018, I've seen them grow. They eventually got funded by a large venture capital fund, of 1.1 million USD. And I had invested in them at a valuation which was, I think a little less than 15 CR. Today they are roughly at a 90 to, or something upwards of that. And it's been quite an exciting journey seeing them grow. And that's how my angel investment journey started. So I've done 4 angel investments till date. And while looking at opportunities in 100x and investing from the 100x fund, I continue to look at angel investments, which catch my attention as well.
Lovely, brilliant. Okay. Before I get on to the more sort of deeper dive questions, I'm really intrigued, and so is the audience, I'm sure, because I've seen this happen last year. What is this Founders Date all about, Shashank? Because it says now that you're coming back, and I know last year I remember seeing these founding dates be multi-city, all over the place. What are they all about? Please tell us a bit more.
So, and that's a great question. So, just to step back a little bit and help the audience understand. See, what happens in a venture capital industry is that you've got, and this is since my VC circle days, we saw there are 3 types of investment, broadly speaking. One is a private equity fund, then there's a growth stage fund, and then you've got the seed funds. And in India, the ecosystem has evolved in various formats. And we saw the advent of private equity funds come in, from 2002, and they became popular 2008 onwards. And then sometime in 2011, we started seeing the emergence of growth stage VC funds coming in, and Axel and Sequoia is doing large number of deals. And there was a huge gap in terms of first stage entrepreneurs trying to raise their first check. And there was a gap, because if you're building a business, you'll go to a VC and they'll say, come back to us after a year, because we need you to do XYZ revenue per year. So there was this opportunity of seed funds, and that piece has started growing. uh, and and where we saw this opportunity was, uh, you know we wanted to, when we launched 100X.VC, we realized that for us, we are somewhat in terms of a pyramid, right here, where we need to invest in a large set of companies, bring them together, right? We need to be the first check, and be the first identifier or discovery fund for other growth stage funds to look at portfolio companies. Now, as a process of that, and you'll appreciate this, Preeti, we work with 100 plus incubation centers across the country, right? Some of these
Mm-hmm.
ideas are wonderful. Some entrepreneurs have no idea how to scale a business. Some entrepreneurs don't know how to build the technology. But these are great potential founders. So if given seed capital, there's a potential for them to grow and come and expand their product and solutions to not only to India and Bharat, but on a global level. When we started doing this, we invested in 20 companies from September 2019 to October 2019. Once we concluded that, we realized we had gone through roughly 2000 pitch decks and spoken with roughly 1000 founders, and eventually decided to invest in 20 of them. Now these 20 obviously were the ones which we really pruned and really understood that these are the companies which can scale. That being said, the ones which we filtered out also were good, but we weren't able to. There were some issues. For instance, the 5 things which 100x looks at is founders background, total addressable market, business model strength, their unfair advantage and moat, and their ability to give a return of 20x. Now the beginning point is founders backgrounds. And when we went back to the companies which we had rejected, we saw there were some ideas which were good, but they weren't about to scale because they did not have the right complementary partner or a co-founder with them. And then we realize that at our stage where we are in the ecosystem, it becomes our responsibility to kind of create a community or an ecosystem where we can bring potential good single founders to talented individuals. And this is a non for profit initiative which 100x launched. And we had a first founders dating in January in Bombay. Then we moved to Delhi. We went to Bangalore, and the core objective is to for founders who are single founders, either business or technical, looking for potential CFOs, potential CTOs, potential CPOs, come in together and interact. So we were doing this pre-COVID days in person, and we recently concluded one on October 17th, which was a virtual one. So this is our attempt to bring in single founders to help them identify talent, because we've realized that in early days that's the biggest challenge which founders face. And this is our small attempt to kind of bridge that gap. Or we're seeing we've been able to get few founders to identify potential co-founders during this in these interactions. And we're seeing a lot of interest from the community. And we intend to do this every 45 days to 60 days. So we'll be announcing the next one very soon. And yeah, that's how the whole founders dating emerged, where the attempt is to bring a single founder in connect with a potential talented individual, uh, and help them identify opportunities to work together.
Absolutely. And I think this resource crunch is not just in the startup ecosystem, but it is in talent, it is in all kinds of things all across the board and across the sector. So
Yeah.
something which with a means to sort of giving back, I think is humongous. So thank you very much for doing that for the ecosystem. I think it was a really novel idea. Nobody was doing it, and nobody is doing it apart from you guys. So kudos and well done. I'm looking forward to the next in-person one, because again,
Sure.
I'm a very in-person person rather than a virtual person. So
Sure. Sure.
Shashank, coming back to the brass tacks again, I know it's all the knowledge is in public domain, but nothing like hearing it from the person who's lived and been through that journey. So my next thing to you would be is to please, I know you've touched bits and pieces, but still tell us a little bit more about the process and the methodology of 100X.VC. What is iSafe Note all about, and what is the thinking behind doing what you're doing and how you're doing it?
Sure.
Over to you.
So,
Thank you.
our investment thesis is very simple. We want to be the first institutional check into early stage companies at a minimal viable product, proof of concept, or early traction. And we've invested in 29 companies, and all these companies are at different stages. Some of them are at MVP, some of them have been doing 1 crore in ARR. So all types of companies which we've been investing into. And our thesis essentially is, when we are evaluating companies, we want to uh, understand what value can 100x bring onto the table for that startup. And what is the short term gain which we can bring onto the table for them in terms of business, in terms of client acquisition, and in terms of helping them raise the next round. And hence, when we look at companies, we look at the founding team, as I mentioned, their ability to kind of complement each other. Because at these stages, right, the product and solution can keep pivoting, but it's the founders who will eventually take it in the long run. So that plays a very important role in our selection criteria. Second, obviously, is the total addressable market. How big is the market opportunity? How big is the market opportunity going to be in the next 10 years for, let's say, India, since we are investing only in Indian registered companies? uh, Third is obviously some sense of a business model by the founders, and how much have they thought about how they will sell a solution, how will they continue to acquire new set of clients, So we try and gauge that, and obviously, nobody is perfect, so we try and see if we can help them out in that process as well. uh, and then the fourth is very critical again, in terms of what's their unfair advantage, what is their moat. If they're building something out, is there some uniqueness, is if they are able to acquire more customers, if they're able to build out a deeper penetration into the market, is will they be able to create an entry barrier? So that is important. And obviously, we are in the VC business, so we want to identify, can this company grow, can we help them grow, and then eventually hope for a 20x kind of a return. So these are the broad parameters. And as I mentioned, Sanjay's been a personal mentor, and he's done more than 130 plus investments. He's seen a bunch of unicorns in his portfolio, including Oyo, Block.one with Peter Thiel. He's invested in the US through Y Combinator in 35 odd companies. And Y Combinator is the early stage fund in US, which launched the concept of SAFE, which is simple agreement for future equity. And this is what we've done in India, where we've introduced and retweaked the instrument as per the Indian laws, called the India Safe Note, which is simple agreement for future equity. Now, the objective of why we wanted to make investments only through SAFE was because we saw, through all our vantage points, through Sanjay's vantage point, Ninad, who's worked with a couple of startups and has been, uh, you know, uh, part of the corporate industry for many years, and Yagnesh, who was earlier with Bessemer Venture Partners, and even Vatsal, who had done 15 investments on behalf of the family office. Um, we had seen that the challenge in early stage investments were that the founders were diluting equity upfront, and the capital they receive, as low as 25 lakhs, 50 lakhs, 1 cr, can take them, before the money hits the account, takes them at least 6 months. Now, if it is a large transaction like a 5 cr to 10 cr, it makes sense. But in an early stage, it is very critical that the amount hits their bank soon. So the safe instrument essentially helps founders not go through the legal process of diluting shares upfront, but raise the capital quickly through this 6 pager document, which essentially means that they can raise capital today, and the equity will be assigned to the investors whenever they raise the next round. And that process is so novel if you really think about it, because it gives the power to the entrepreneurs to start building what they're building out. And hence the rate of failure in the early stage ecosystem at the bottom level reduces. Till the time that doesn't reduce, you will not see many companies growing up the ladder. And hence SAFE, which we believed, and hence ours is the only fund investing and making all investments only through SAFE, is because we want founders to raise the first seed capital very quickly, and we close transactions within 20 days. So that's why we did SAFE, and that's how we evaluate and our thesis of the fund. I hope I've answered that question.
I think it more than adequately and very comprehensively addresses my basic question of what is this safe all about. So that brings me to my next question, Shashank. Basically, what is the number one priority of the business right now? What are you looking at? What are you as five people thinking together? What is going on in your minds, especially in the last 5 or 7, not even 5, yeah, maybe 7 months or so? I mean, not that anything has sort of changed. Only our way of working and living has changed. Besides that, I don't think pretty much has changed. But seriously, what is going on? What's the most important thing right now? And again, please include a little bit of your plans for tier 2, 3, 4 India, because that is where my interest lies as well. And like everybody knows, the next billion users of the internet, the next 20 odd unicorns, they are all going to be from the Nagpurs and the Jabalpurs of the country. So over to you, Shashank. Thank you.
No, I absolutely agree, Preeti. And our vision is very simple. We want to invest in 100 companies a year. We invested in 20 last year, and uh, we announced them as a portfolio company in December through a VC pitch day. And January onwards, we started looking at newer companies. But then, in March, we had COVID, and hence, it's very important because we are a very hands-on company. VC firm which works within our portfolio companies, and hence we decided to pause our investments to work very closely with our portfolio companies. We did that up till May, and then we reopened up and started looking at companies again. And but this time around, we decided it's not only about numbers; it's also about when you invest, can you help the companies grow? And during COVID, we also weren't certain which sectors will evolve. The trends were just emerging in May. In fact, fear psychosis was very high in May and June. Um, Everybody was panicking. So we started to look at newer investments, and we eventually closed 9 investments in August of 2020, and announced them through a VC pitch day on September 18th. So we are now at 29 portfolio. The reason why we did 29, I'll talk about the sectors, and then I'll talk about the focus going forward. These sectors come from EV mobility SaaS platform to wellness, women centric platforms, to gig economy working platforms, to deep tech startups. And these 9 set of companies we felt had the potential for over the next few months, because I come back to the point, whenever we invest, we want to ensure, can we help them grow in the next 3 to 6 months? And then, as a function of that, can we help them grow to a level where they can raise the next round? uh, we did that, and now in September of 2020, things have started opening, as you rightly said. The only difference now is that we are working from home. We're enjoying house tea, coffee, parents homemade food. I'm doing that a lot. I'm currently in Delhi right now, for some time, and thoroughly enjoying the home cooked food. But besides all the pampering you're getting at home, I think nothing else is changed. I think the economy is opening up. Businesses are picking up. Yes, some businesses have been impacted in terms of the retail and certain CPG product category companies. But I think for SaaS companies, for online education technology companies, even for agri tech companies, it's a great time. And at 100x, we are also now, as I mentioned, that our thesis is to invest in 100 companies, and hence we still stick on to that. COVID in our mind is, we've crossed the hardest part, and it is back to business. So we are now, in fact, looking at investing in the next set of companies in class 03, which we will close by November and announce them by December. So by end of this year, we should be sitting on a portfolio size of 40 to 45 to maybe 50 odd companies. And next year, hopefully by God's grace, if COVID is helps us meet people physically, I intend to travel to tier 2, tier 3 cities. uh, we've been working with incubation centers across the country. Some partnerships have been going on. We've invested in few companies from incubation centers, and we intend to do a road show. We've done it in some cities, but there's a lot of coverage to be done. And I think starting next year, once that piece picks up, I hope to be in Nagpur, Jabalpur, Indore, all the way to East Bhubaneswar. And again, as I mentioned, our objective is to invest in companies across India, not only from Bombay, Chennai, Bangalore. No, the objective of 100x is to increase the number of successful entrepreneurs, and they can be from anywhere in India. So that's going to be my approach in the coming months, going to as many cities.
Right, which is brilliant because then again, it is all over going through the learning curve, going to the grassroots levels, finding out where the good ideas are, whether they're executable. If they're not, then mold them up, mentor them up, and bring them to the level wherein they can be executed and then funded and then made into a successful business. So, absolutely spot on and great job with that. Thank you so much. Which gets me now to my next question. What is the favorite part of your job right now?
I think you cannot do this job if you don't like talking to entrepreneurs. So I love meeting people. I love interacting with new entrepreneurs. I love being part of this new developing development cycle where you're able to identify a trend or an upcoming trend and be part of it, and you get to learn so much from entrepreneurs. So I think the best part about it's not a job, it's a lifestyle. It's something which is as good as home. And I love interacting with startups. What we miss is I think the in-person interaction. Hence I couldn't hold myself back, and last week I was in Gurgaon meeting founders throughout the day. I spent 12 hours, to the extent when the meeting got over I said, no, let's sit, let's still try and understand more, because that meeting, a physical meeting, has been missing. Again, tomorrow I'm in office in Noida, meeting a bunch of entrepreneurs. So what I love about this is, just interacting with entrepreneurs. And if you get that opportunity to be part of their early journey and see them grow, I think it's very liberating. Again, this is different for everyone, but I think all the partners at 100x have that mindset, and hence that's why we started. It requires going through a lot of pitch decks, meeting with a lot of entrepreneurs, understanding their businesses, and if you like doing that, then it's a great place to be in. And I think that's the best part about my job, or my life right now, so to speak.
Brilliant. That is really great. And I know you've touched upon this a little bit, but then again, are there any larger future visions for 100X.VC? I'm talking about maybe 2 years, 5 years down the line. Have you folks got together and thought of that roadmap, or is it all that you're thinking, each day as it comes or each year as it comes? A little bit more on that, please,
So,
if you may. Thank you.
as I mentioned that our vision is to invest in 100 companies a year. So the next roadmap per se is to have a portfolio size of 400 to 500 companies in the next 4 to 5 years, and that's the roadmap. We want to invest in 400 to 500 companies across India, and that's the vision. And right now we are only at 29. Next year I'm hoping we should be able to reach closer to a triple digit number, and during the year. So 2021 Jan to December 2021, we should be able to invest in close to 100 companies. But the vision is very clear. We are the feeder into the growth stage venture capital industry, and all the funds which are looking at investing are doing pre-series A to series A kind of investments. 100x will build out a portfolio of 500 companies over the next 4.5 years to 5 years for all the VC funds to identify and invest into. They're going to be led by 100x. We are working with these founders, and that's the space we are in. So again, we are not your typical venture capital fund doing 10 investments and larger ticket size. No, our objective is one level below that. There is seed fund, there are discovery fund which will invest in a very large set of companies and ensure that these companies can grow with the growth VC money and take them to that level in terms of managing their businesses, mapping their metrics, and helping them succeed.
Okay, thank you very much. Couple of quick things as well again. What do you think is the biggest strength of 100x, and what are some of the business philosophies and ethos that 100x absolutely lives, breathes, and swears by?
I think the strength comes with the fact that it's a great team. Sanjay brings in this very wide um, uh, experience of done having done 130 plus angel investments. Constantly learning from him. Uh, you know, uh, the kind of companies he's invested into and mentored, he's seen that growth over these companies over the last 10 years. And there are so many experiences which we bring onto the table through his personal experiences. And I think that's the one of the biggest strengths of 100x. Um, and our second partner, Ninad Karpe, uh, he was the ex CEO of Aptech and ex managing director for Computer Associates. So he's had a very wide experience in terms of managing very large companies, and currently resides on multiple listed company boards. And his vision on strategy and how companies at an early stage can avoid making mistakes which can be very costly, I think makes it a very important point and important strength point for 100x. Third would be Yagnesh, who was the ex operating partner for Bessemer Venture Partners, and he's worked for a large venture capital fund, and he's very good at numbers because he was the CFO of Mahesh Tutorial. So inculcating the thought process of financial due diligence, managing your books, how to be frugal, and imbibing that thought process in that journey, I think brings in a lot of strength. Each team member is very crucial in 100x, and last but not the least, Vatsal Kanakia. I think ours is a fund which has a one partner which is a CTO. Very few funds have CTOs, and at a very young age, Vatsal has managed to kind of bring on, identify new trends and make early stage investments, identify great IP products. So that's the strength of 100x. In What was your next question? Strength, and you're on mute.
Sorry, I'm
Yeah,
right back at here. So it was basically the strengths and any business philosophies and ethos that you guys
yes.
live and swear by.
So strength is this, and ethos is in terms of, you know we want to back founders who are serious about making, doing business and scaling their businesses. um, and that, from that perspective, we are very clear in terms of identifying entrepreneurs who are full time into their engagements. uh, we are not excited. We don't engage with founders who are, let's say, running a second business or a third business. uh, from that way, we are very very clear in terms of which founders we want to back, and I think that ethos, that core belief will never change. um, and also in terms of, our value proposition, in terms of the ticket size which we are cutting and giving the money, I think that will be always consistent. Because again, as I mentioned, we are building out a discovery fund, where we have the ability of making 100 investments a year. And if we are able to build out a portfolio size of 400 to 500, we need to ensure that these founders are full time engaged in their portfolio companies and have an objective of uh, building out businesses which can scale and raise the next round. So from those core points, I think, again, very very objectively looking at startups, and the only mission is to invest in these startups across the next 3 to 4 years. So that's it. But yeah, I think the strength is each of us have very different and complementary skills, and I think, each of us is learning from each other. And I think, more for me, I learn a lot every day from Sanjay, Nad, Yagnesh, and even, Vatsal, because he's very good at technology, and it's a great environment to be in. And we're really excited about 2021 and backing companies.
Thank you very much. And just on that, a fun fact, Vatsal and I have been on a few pitching
Yes,
competitions together. So we have
correct,
gone
correct.
and judged stuff
Yes,
together.
yes,
So
yes,
here's a
even.
question for yeah, absolutely. So Shashank, here's a viewer question for you, and I'm going to just flash it up on the screen and read
Sure,
it out for you. So
sure.
this is from Rohan Chandra, and he says, "What should be the strategy for investing this and start up in any of the Indian electronics companies start their manufacturing in the tier two and tier three cities of India?" So there you go.
Okay, so 100x invest in asset light models, and we encourage startups to have asset light models. So we're not averse to hardware companies. So whether it's an electronic or a robotics company, we've done, just in our last class 02, we've invested in a robotics company called Jetson Robotics. So uh, but if you're starting a hardware slash, let's say, electronic, and I'm assuming it's a hardware company, having your own manufacturing unit should not be the focus, because it makes your business asset heavy. uh, there are ways of tying up with third party manufacturers, and you shouldn't be bringing on that liability on yourself. What you should be focusing on is the IP, the IP which you can generate, the hardware, and if there's any software associated with it, having control of that, building that piece out, where you can maintain your cost and try and drive higher margins, uh, is should be the focus. So manufacturing plant and owning manufacturing plant is something a startup should not be working towards if they're building out an electronics product. I think what you should be working around is how efficient can that product be made, and wherever it's made, those there are multiple vendors and third party manufacturers with whom you can tie up and figure out those modalities. So that's my answer to that question.
Thank you for that. And along with that, I have another question, and it is somewhat in line with that. So, any kind of advice that you would want to give the founders that you are in continuation of, whatever you've just said, who wants to come and get funded by 100X VC? Any sort of advice, any tips, tricks? What are you looking for, and how does one sort of go about it? Over to you.
This is a
Thank you.
very, very simple process at our end, Preeti. You know, we do not miss out on a single pitch deck which comes in. Very simple process. You have an idea, or you have an MVP product or solution ready. Please email it on pitch at 100x.vc, which is pitch at the rate 100x.vc. uh, the decks are received. All of us go through these decks on a day-to-day basis, and instantly respond. So you'll receive a response from us within 4 to 5 days, either in a yes or a no. If it's a no, this means that possibly we feel this is not a scalable model, and we don't think that we can possibly look at it later, or maybe it's a sector which is not of preference. Let's say it's a travel tech startup, or let's say a manufacturing plant kind of a startup, something which we're not looking at, despite the fact we are very sector agnostic. And if it's of interest to us, then we'll ask you to quickly fill up a form which will ask you to send us a few quick details in terms of a short video, your updated pitch deck, other details about your team members. We'll review the details. If we like it, we'll have an call with you, and we'll take a deeper dive through our investment committee call. And if it makes it through our investment committee call, we'll start our technical due diligence and financial due diligence by issuing a term sheet, and during which we'll have multiple calls, and we intend to complete that process within 9 to 10 days. And upon completion, if it's good to go ahead, we issue the term, ISAFE agreement. Upon signing the ISAFE agreement, you receive the funds in 24 hours. All of this happens in 20 days. So either uh, within 20 days, you will get to know you're getting funded and you will get funded, or you will get to know that this is not something of our interest, and maybe we can look at it in the coming months. So that's the approach we follow in terms of evaluation. But in terms of which sectors we are looking at, we are very sector agnostic, Preeti. As I said, our objective is to invest in as many startups which can grow. So hence we have no bias against sectors. That being said, as I mentioned, class 02, we only invested in 9 companies, because one of the objectives also, can we help them grow in the short term. So even COVID, if travel tech is, as an example, not something which is favorable to the larger VCs, and business is slightly tight, we will not invest in that business because it's momentarily not growing. And if we can't help the company grow, then it's right now not of interest. That being said, maybe travel tech will open up in January, March, and hence again we'll open up to that sector again. So very sector agnostic approach, and very asset light models. Uh, uh, Companies which can be frugal with money but grow very aggressively, we'll be more than happy to back them.
Okay, I think that is fair enough and it is crystal clear to the audience. You've heard that it's 100x pitch at 100x.vc is where you need to send your pitch decks. You will receive response in 4 or 5 days, whether it is a yes or a no, depending upon the criteria that Shashank has already laid out for you. So off you go, founders and their ecosystem stakeholders. If anybody is looking for funds, please drop in that email there. Now, a little bit slightly different sort of a question. I know you give a lot of advice and so on and so forth, but what is some of the best advice you have got yourself? Would you like to share that? And that has probably made a deep and huge impact and shaped you into the person that you are today, Shashank.
Yeah, I mean, I got a lot of advice not to join a startup after my MBA. I went ahead and did that. So that was a great advice because I did the opposite of that. Um, uh, so I think I've met a lot of people in my life who've given me a lot of good advices, and I think while I've worked in various industries, and from a large company like NIIT and Zensar Technologies, which are listed companies, and great ITS companies, to a very small startup, uh, to now investing over the last 4 years. I think all I've been very fortunate in terms of the partners, the bosses, the managers, I've interacted with and worked with. And I think from that perspective, one massive learning, or one advice which I think remained consistent, was that you need to put in the X number of hours, and and you'll also appreciate, this is something which we talk a lot about in terms of the startup ecosystem, that a lot of people have a lot of ideas, and ideas are dime a dozen, but everybody underappreciates the power of execution. And so whatever we do, whether we are working for a large company, in terms of a large project, execution is the key. If you're working for a young startup, execution is the key. You might have built out a great product. uh, if it doesn't sell, uh, there's no point. You might have a great idea, but if it doesn't convert into a product, it doesn't make sense. So idea needs to convert to a product needs to convert into business, and all these things are backed by enthusiasm followed by execution. So I think, I mean, there are multiple advices I've received, but I think one thing which emerges now when I look back, everybody in their own way said that execution is the key. And I think if you're able to consistently execute whatever you set out to do, I think that is where the strength lies for any business, or any endeavor which you uh, do. But then I've received a lot of advices which I've not taken also. As I mentioned, a lot of people told me not to join a startup. I did. Um, and yeah, so I mean, that's it. I think one of the advices which I uh, picked up was the execution. I think the other advice was, uh, which remained with me, was uh, you know uh, being consistent in your offerings. So for instance, during my first VC circle days, we had, and I was just talking about it yesterday with somebody. We had a half baked product, and we were thinking, no, let's just complete the product and let's go out. And I remember my founder telling us that just start going out and pushing the product. And I think that was the greatest advice which we received, because I give that now to most of the entrepreneurs, that till the time you don't interact with the customers and they don't come back with a feedback, you might be building a Taj Mahal inside, but they never wanted a Taj Mahal. They just wanted a, let's say, a PVR cinema. So you need to be realistic, because you're building a business, and if there are not many users outside, you will not realize what they actually need. So whether it's that's why you do product version 1, beta version, alpha version, and hence the second important advice was, don't be scared to roll out a product and test it out in the market, even if you're not ready. Um, I think these two are the advices which I recall, and I think they've been very, very helpful and handy to me.
And that's great to hear because, again, resonates so well with me. Execution is actually the key. You can keep on sitting and ideating for the rest of your life. But if you do not take that first step, how will you know whether that was viable or not in the first place? And
Correct.
then
And
again,
you'll fail.
yeah.
You'll fail, and
Mm.
that failure will teach you that, okay, fine, I should not have done A plus B. This time, let me try A plus C or A plus F. Whatever. So yes, that is very, very crucial.
Absolutely. And yeah, and to add to that again, even if you fail, there are still learnings in that, like you say, so the equation could change, the
Correct.
outcome could change, but then that process has to be done, has to be taken
Correct.
in the first place to
Correct.
get all those learnings. So
Correct.
absolutely spot on again.
Correct.
Any regrets, Shashank, at all? Not in terms of success, failure, whatever, but any kind of personal, professional. Any regrets to the amount of, if however much you want to share or not share, totally up to you.
Yeah, I think the biggest regret I have is not having started doing angel investments way back when I was in 2010, because there were a bunch of great companies which I constantly mapped at VCC Edge, and I was seeing companies grow. So I think the only biggest regret is not starting investing early on, and I think it's a great time for not only startups who are building out products, but it's also a great time for angel investors and funds to be investing in companies. And I firmly believe that the next 10 years for India is very, very crucial, and we are possibly at a point in time where we were where Silicon Valley was in the 1960s. Sorry, my son's just woken. Sorry. Yes, so that's my answer to that.
Okay, fair enough. And now, here is to the fun part. If you're ready, I have some rapid fire questions for you.
Sure.
These will be off the cuff answers, whatever comes first into your mind. And
Sure.
then we will wrap up with your advice for the ecosystem stakeholders. So, whenever
Sure.
you're ready, I will start shooting, Shashank. Are you
Sure.
ready?
Sure.
Okay, great. What is the thing that you're most afraid of?
Water, deep water.
Okay. If you could paint anything, what would you paint?
Mountain.
Okay. What celebrity annoys you the most?
Priyanka Chopra.
Okay. What is the meanest thing you've ever said to someone?
You're not good at it.
Okay. What is a lifelong dream, Shashank?
To make 400 odd investments over the next 5 years, I think that's the biggest and the largest dream we all are having at 100X.VC, and I think that is what we want to accomplish, and for now that's the dream.
Okay, fair enough. If you could talk to the President of India, what would you talk about?
We need to have more policies which are favorable for startups to start building out startups. I think there are some initiatives which are happening on the government side. There's some initiatives which are happening on the incubation side and the private side. So we need to speed up things, because the wave is here. And I think he'll narrate that to the prime minister, who will then execute it. So
Okay. All right. Let's, yeah, cross to that. Um, on a scale of 1 to 10, how cool are you, Shashank?
I think 7.
Okay. What is the best advantage to being really tall?
What's the biggest advantage of being tall?
Yeah, really tall. What do you think?
You don't you don't
Yeah.
have to jump too high to push the ball in the basketball court.
Okay. So there we know that you're a basketball player, somebody that likes basketball. And my last question, um, how much time does it take for you to get ready in the morning, Shashank?
So very quickly, not more than 5 to 10 minutes. I'm a firm believer of just not wasting too much time dressing up. Just starting a day very quickly.
Okay, fair enough. With that, I have come to the end of my rapid fire questions. Thank you for your honest answers. And now, okay, why don't you? Yeah, okay. Does he need your attention? That's fine. Yeah.
Sorry
So
about
this is
that.
something. No, no, please don't be. This is something else we all have learned to sort of live with in the past 7 months or so. Remember that time when during one CNN interview, this is before the COVID time, and the
Yes.
reporter's sort of son came running by, and then the wife ran behind the son and swooped him and then took him away. Gone are
Yeah.
those days because we're all living this in the past 7 months. So
True.
absolutely all
True.
right. Thank you
True.
very much. And
Yes.
in fact, yeah, he's just gotten up, so he'll be sort of, wondering what's going on, what's happening, what's Dada doing. So anyway, so we've
Yes.
come to the end of our conversation. And
Okay.
as a parting advice, what is it something that you would like to tell the founders, to the stakeholders, to
Okay.
any budding startup? entrepreneur, student wanting to be a studentpreneur, anybody out there in the tier 2, 3, 4 Bharat that is tuned in today or will be watching the rerun. All yours. The
Sure,
floor is
sure.
entirely yours. Go for it. Thank you.
Sure. No, thanks for that. And I'll be very honest and blunt over here. Is that founders today have a great opportunity to start building out whatever they want, because you have access to information, you have access to such platforms. Like the initiative which Preeti is doing. Uh, you know, being part of incubation centers which did not exist earlier, having access to content uh, which was not available earlier, having access to cheap data, which gives you access to a lot of information on how to pitch, how to talk to investors, having access to platforms like LinkedIn and YouTube, where you can reach out to investors directly on YouTube, sorry, on LinkedIn, Instagram, and Facebook. It's eased the barriers, and everybody is more approachable. So hence, if founders say, I don't know how to do this, then today it's a failure. If you done said something like that 10 years ago, it would have been it would have been okay, because you did not have access to information. Today you have access and enough material through open source, and enough of community, enough of incubation centers, and enough of seed investors who are equally aggressively scouting for opportunities for you not to build out something. And hence I would say, use these resources properly, use these avenues properly, and start executing, because for the first time in 15, 20 years, we are at a vantage point where all of us are working as an ecosystem, and it's very, very important to leverage. And you can't just sit on an idea. You have everything right now, and you can start moving on to an idea, execute it, fail, and move on to the next idea. So that's my one core advice to all the founders across India.
And as the very last word for the upcoming cohort, if anybody is looking at joining that, are there, I know you said sector agnostic, but any few tips and tricks for that as well, I think will be really helpful because you are closing in, say, November and December. So there's still time for
Correct.
people to sort of take advantage of that. Over to
Correct.
you.
So correct. So if you are building out an MVP, or if you are at a POC stage or an early traction, feel free to drop in your pitch decks at pitch@100X.VC. As I said, if you're an asset light model, and any sector uh, where we feel that we can add more value over the next 3 to 6 months, we will be very happy to evaluate and identify that as an investable opportunity, and possibly go ahead and invest also. We are closing class 03 sometime in November, and then starting next year we'll start evaluating companies, or not actually, evaluation goes on regularly. Start investing in companies for class 04 in January 2021. But yes, very open to any type of company. If you're raising your first check, if you're bootstrap, if you're a minimal viable product, or you have early tractions, very happy to review your deck and schedule a call, and understand and learn more about your business.
Okay, fair enough. I think with that, it is time for us to say our byes to the audience today. So it's time aptly to say thank you first to the audience for tuning in today. Thank you, Shashank, for being here to come out and talk to me and give out all these tips and tricks, which are very relevant for all the ecosystem, especially for the tier 2, 3, and 4 Bharat. Thank you to Echo Events for this live stream. This is me, Preeti Chaudhary, your host for VC Spotlight that featured Shashank Randev, founder VC of 100X.VC today, saying until the next time, please do take good care and stay safe. Thank you very much.
Thank you.
Thank you.